Hello and welcome to Kitco Mining's Investment Trends with me, Paul Harris, where today we are talking about silver exploration. Very exciting time. The silver price has moved through $40 per ounce, a psychological level. Joining me today to talk about this is Daniel Earle, President and CEO of Highlander Silver, which trades on the TSX under the ticker HSLV. Daniel, welcome back to Kitco.
Thanks for having me.
Now, Highlander Silver is exploring for silver at the San Luis gold-silver project in central Peru. I want to get into the exploration program, the drilling you've been doing there a little bit later on. But first, let's start with the silver price. As I mentioned, it's broken through that $40 per ounce level. What is the significance of that for the silver market and for silver juniors such as yourself?
Well, I think broadly, we're in a precious metals market environment that's very, very constructive. And I think silver specifically, we can say, is experiencing different market conditions than we've seen in prior cycles. So in prior cycles, I would say that silver has, operated basically as a derivative play on gold. And it's exhibited that kind of behavior. If you go back to the last great peak in the silver price, it was almost like a sort of a blow off, like a liquidity event, a blow off top followed by a pretty sharp sort of correction. I think the market that we see, and you can see this in the price action as well, in this cycle is very, very different. I would say that this is a true structural bull market for silver, where we've got constrained supply, set against powerful secular demand growth from the solar sector, but this is starting to broaden out because silver, of course, is the best conductor, better even than copper. It's starting to feed into, the drive to electrification and even the AI. With these very advanced and expensive chips, silver has a role to play there as well. And so I think this market is something different than what we've seen before. And I would say in terms of, the evolution of the market, silver has just started to take over leadership within this precious metals bull market. And so we're seeing, for example, on the year-to-date numbers, if you look at silver, it's up 43% or so. That's just slightly ahead of gold. So we're in the early innings of this. If you want to think about the gold-silver ratio, in a bull market for silver, when silver takes over, typically we'd be looking to see, after the gold-silver ratio peaks, that ratio come in by as much as half. You think about how that's played in this market this year, that ratio got up to, 106, 107 to 1. It's now come into 89. I think if you think about that framework of it coming in by half in a powerful bull market, there's clearly a long way to go in this silver bull market.
Now, with silver at, let's say, $41 per ounce, then that suggests there's a long way for it to run. The historical high in the last cycle was, around $50 per ounce? So it sounds like if it returns to sort of the mean, if you like, that's going to go much higher than $50 per ounce.
Oh, absolutely. If you look at that gold-silver ratio and you look at where gold is trading at $3,600 an ounce, thereabouts, if that ratio gets back to, prior cycle lows, then, certainly the silver price is going to be well through, the prior high at $50 an ounce. We should be thinking about $60, $70, $80 an ounce silver. And I don't think, because of the structure of this bull market, I don't think it's unrealistic to be thinking about the potential for $100 an ounce silver, in the midterm here.
And a lot of people think the gold price still has a long way to run, so that will keep pulling silver up as well.
Well, that's right. I think if you think about the drivers for a precious metals bull market, and you think about the environment we're in, we're just about to see a restart of the Fed cutting cycle. Depending on what your macro view, that may be, a cutting cycle that puts the bottom in of a soft landing, and then we reaccelerate from there. Depending on your view, you may see something more dire in the future. And I think it's interesting in that this Fed cutting cycle is about to get going at the same point that we're expecting that inflation is going to lift back up again. So this would be another thing that would typically be associated with stronger precious metal prices. If you look at the consensus estimates, we're expecting that inflation is going to be, in the coming months through 3%. There are credible voices out there. These are alternative views, mind you, so I'm kind of picking an extreme example here. But someone like Adam Posen, who's a well-regarded economist, is calling for inflation to get back to 5%. Okay, and so there's a question generally about what governments and central banks are going to do to contain what have been rising yields at the long end of the curve. Because, of course, with heavily indebted sovereigns, those high yields mean high interest expenses, and you start to put pressure on the fiscal situation. So if you think about what some of the potential solutions could be there around yield curve control, quantitative easing, so on and so forth, then you start to talk about drivers that could really catalyze a much sharper move higher in precious metals. So these are all the things that investors need to be thinking of, and these are things that are still yet to play out.
Okay, well, let's bring our conversation towards silver stocks. And there's been quite a shake-up in the silver stocks over the past year or two, because we've seen 3 transactions totaling an aggregate of almost $5 billion on primary silver projects. These primary silver projects are incredibly rare. What do these transactions and the silver price mean for silver stocks in general?
Yeah, well, look, I think in general, when you're talking about the silver sector, you're talking about a sector that has lower margins than the gold sector. If you look at the cost of production relative to the metal price, those margins tend to be lower in the silver sector. So you could say, if you're uncharitable about this, that it's a lower quality sector. I think for fundamental investors, long-term investors, their response to that is to kind of congregate, to hide out in these relative bastions of safety in the higher quality names. And so you tend to get this kind of effect that we see, much more pronounced in the silver sector of these kind of consensus positions than we do in the gold sector, for example. And those names, as you pointed out, are disappearing due to M&A in the early part of this silver M&A cycle. So those consensus position would have been, Silvercrest earlier in the year. That was acquired by Silvercrest, in a $2.3 billion transaction.
Kitco Mining, yeah.
Core, sorry. Silvercrest acquired by Core, in a transaction that closed in the first quarter. More recently, we've seen Mag Silver acquired by Pan American, and transaction that closed last week. These would be your top 2 names for North American investors. For European and Australian investors, their number 1 name, really the only investable name from a market cap and liquidity standpoint for those investors, would be Adriatic Metals. That transaction, it being acquired by Dundee Precious, was also closed last week. So I think you are seeing this kind of the beginnings of what is going to be a rotation, where those investors seek out these new quality vehicles where they can maintain, and I think a lot of them probably want to grow their exposure into silver, but they want to do it in a quality way, given the structure of the sector.
Now, silver stocks are famous for having a high beta. When they start to run, they really start to run. And as we've mentioned there, silver's running, the silver metal is running, and there are fewer companies in the race. So is this just multiples on multiples? Are they really going to run fast and hard?
I think the history would suggest that they would. And so this is a sector that just trades at premium valuations relative to gold. And I think those valuations in a constructive market environment, they can grow. And so, for example, if you want to use the Mag Silver example we were talking about earlier, that was a stock that was trading at, nearly 2 times net asset value in the last, let's call it a mini bull market that we had in 2016. And that was 5 years before eventual production, commenced for the Juan Scipio asset in 2021. So that is an elevated valuation. And what it's reflecting is scarcity. It's reflecting quality. Quality, basically in this sector, it means grade and it means growth. And so that was, that was a prime example of that sort of, valuation.
I think a good compare contrast there is even the best gold companies. Their multiple is 1 to 1.5.
That's right, and so that would be for and you'd be doing very well if you got to that sort of multiple as a development story. And then for the producing stories, they trade off EBITDA multiples. But there again, you see elevated multiples. Mag Silver is acquired at, 18, depending on whose numbers you look at. On our numbers internally at Highlander Silver, when we're looking at the market, we saw that acquisition at 18 times EBITDA. That's almost approaching royalty territory. I think any gold company would be very envious of that sort of an exit multiple.
And Highlander Silver, you've been benefiting from all this as well. Your share price is up about 85% over the past year. You now have a market capitalization of about 440 million Canadian dollars. Having this elevated market capitalization. Does that enable you to, what does that enable you to do that perhaps you couldn't have done a year ago?
Yeah, well, certainly it's elevated relative to where we were, but I wouldn't say it's elevated to what the underlying valuation is. And certainly, you know, I think what I could say is that we've just recently started to become investable to the institutional market, which I think is really the future of this company, growing into that market space. So if you look at our liquidity, you know, we've just started in the last month or so trading through $500,000 a day of liquidity. And so that's really only a small segment of the institutional community that will be able to participate, you know, at that sort of limited liquidity, and also, you know, relatively, down cap in terms of capitalization, under $500 million of market capitalization. Really, we need to get to $1 million a day of liquidity, you know, which is something I think we can achieve by the end of the year. And then certainly, you know, $3 million to $5 million a day of liquidity, you know, in 2026 is when you start to become broadly investable to the institutional investor community. So, you know, and so I think we're just starting to get into, you know, that period. From a valuation standpoint, you know, we're an exploration and development story as we sit today. And the valuation is underpinned by the net asset value of the existing high quality resource that we have at San Luis. And if you look at the range of analyst estimates on the street, we've got 2 brokers that cover us. There'll be, you know, potentially as many as 3 more brokers who launch coverage by the end of the year. They're basically sitting in a range of $500 to, you know, $600 million net asset values. And again, if you're a high quality story, you know, given scarcity, if you can demonstrate growth, you can certainly, that net asset value isn't a limitation. You can trade, you know, at a multiple of that net asset value.
Your market capitalization is approaching 500 million Canadian dollars. As you get to that level or higher levels, do you start getting in indices? Does that get you that higher, you know, daily liquidity?
Absolutely. And that has outsized impact in the silver sector relative to gold. And even in the gold sector, you can see some really pronounced market impacts on, you know, rebalance events around these ETFs with the indexer demand. You know, so for our company, we now have a multiple of the kind of liquidity and market cap that would be required to be added to the Silver Junior Index. This isn't an index that is well covered by brokers.
Is that the SILJ?
SILJ.
Okay.
And, you know, but that rebalance would take place in November. If we were added, I think we're probably in pole position to be added. If you look at the last rebalance, you know, Discovery Silver and Vizsla Silver were added at that rebalance earlier in the year. I think for the upcoming rebalance in November, we're probably in pole position for that. A normal market weight there could be as much as 6 million shares, depending on where our share price is at the time. So that could have a significant impact with a tight share structure in terms of the market impact, but then also in terms of, you know, a more lasting impact in terms of the liquidity that'll help us generate. You know, I think the next index add, you know, potentially would be the SIL index. And these are under different index providers. So you can be, and many silver companies are in both of these indexes. That rebalance would take place in April of next year. There again, we easily qualify, you know, by market capitalization and liquidity for inclusion in that index. That would be an April event and could be as much as 12 million shares at that point. When you look beyond that, you're talking about some bigger indexes where we really have to springboard, you know, from those earlier index adds, and with the evolution, we've been building liquidity anyway organically. You'd have to reach to higher levels. If we got to $1 million US of liquidity, then we would qualify for the GDXJ, for example. That would be the middle of next year, and then there's a whole series after that. And you really can springboard. We saw that with Discovery Silver. It's one of the most incredible things that I've seen, and is really a great description of, you know, the impact of passive flows in our market now. It's something that cannot be ignored, where they went from one index to the next index to the next index through a string of half a dozen index adds that have delivered the incredible performance for their shareholders.
Well, that's the pathway that's potentially ahead of you. Now let's talk about how you're growing value to try and get there and realize that. Since we last spoke, the drills have been turning, and you've reported assays from the first 7 holes you've drilled to test the conceptual open pit target along a ridgeline where the Bonita vein system is exposed 10 kilometers south of the Ayelén underground deposit. Talk us through some of the results and what are you seeing there?
Yeah, absolutely. And so, just to frame it, you've got a large property package here. Most of it's undercover. In terms of systematic exploration, very immature, really concentrated only in these small erosional windows in the highland areas where the winds have come through and swept clear the cover from the underlying geology. And so Ayelén is one of those. The resource itself is one vein in its splays set within a vein field, where the total veins with the mapping work that we've done, now number 12 veins. And it's not just about the lateral laydown, going from one vein to the next vein to the next vein, but we think, with no drilling below 300 meters and evidence that you've got overlapping hydrothermal systems, that there's also a vertical opportunity. So an opportunity to repeat, that productive horizon that you have at Ayelén reflected in the resource, potentially multiple times at depth. So a large opportunity there, but we're focused on permitting for a first phase of production in that area. In the Bonita area, so this is coming down to 10 kilometers to the south, as you mentioned, you're talking about another one of these erosional windows. And you talked about a ridgeline. That's exactly where the winds have swept clean the soils and exposed the veins that are now in outcrop. We have every expectation that there's a larger vein system there underneath cover. It had never been accessed previously because at this elevation and this kind of topography, you were never able to fly geophysics with a conventional, helicopter mount or on a biplane or what have you. Now with these incredibly powerful quadcopter drones, you can fly, let alone at 4,000 meters elevation, you could fly geophysical survey at Mount Everest at 8,000 meters elevation. This is how powerful these drones are. So for this property, given that it's underneath cover and it's at elevation, this is a breakthrough of sorts. We've got 2 of these drones now that are working on providing geophysical coverage of the Bonita area. And we'll see those results in the coming month or so. And what we expect to see, because we can see the hints of this coming through in the geochem, is that there is a much broader opportunity there, with more parallel structures that need to be tested. So, we're starting from a standpoint of, in the historical database, only 2 drill holes from one location. One of those holes missed. And now we've added a further 7 holes. All 7 of those holes hit, broad intervals of high-grade mineralization, either right from surface or near surface. And we're now on the cusp of, within the next, week or 2, reporting the next set of results. And we'll be reporting results roughly every 6 weeks.
You've got the existing resource at Ayelén. You're drilling now at Bonita. How does everything sort of fit together in your thoughts about, looking ahead, obviously in the future now, about a potential development here? Obviously, results are pending at Bonita, and so you've got information to fill into that. But, do you have initial thoughts of how you potentially take all of this forward?
Yeah. So again, with Ayelén, focused on a first phase there, underground mining, offsite processing, and really fast tracking that towards potential production 2028 or so. Okay. And then with Bonita, this is so it's also a low sulfidation epithermal vein system, but broader structures, moderate grades. The topography supports this being an attractive open pit target. And so we're really drilling these shallow holes, into outcropping mineralization or, the down plunge of those same structures. And the idea here is to be able to define an open pit resource with a high grade for an open pit, but greater tonnage that would support, a second phase major expansion where we'd be looking to bring on a milling operation right on site, at a higher throughput, generate economies of scale and so on, and take in the combined feed from the project. So we're really thinking about this in terms of, phasing this project and growing into a larger opportunity in terms of exploration supported by in terms of production supported by the exploration efforts.
How much exploration work do you estimate you need to do to be able to get to that sort of scenario in terms of meters drilled, investment, etc., and of course time?
It'll be dictated by the results, but basically the drill plan that we have for Bonita right now, we've just taken the veins that are in outcrop and then plotted up a program that would get us to an indicated resource for those. And now, again, we have every expectation that there's a bigger opportunity there. That'll require additional permitting, additional drilling. But for at least supporting, that second phase of the project, we think we could do that within, the opportunity that's kind of exposed in outcrop.
Now, Bonita's not the only other target you've got on the San Luis project. So, again, when you're thinking about this, one, you've got Ayelén more or less defined. You're getting Bonita eventually towards an indicated resource. Is that the moment of time to start looking at production? Or do you continue with the exploration on the broader package and just see how big it can get?
Oh, the exploration, it's a very large land package. It's mostly undercover, so there's very limited systematic exploration, but incredibly fertile geology. So, we talked about these two vein systems in these little windows of exposed geology. In the geochem, there's every reason to expect that there's going to be a third vein field. We see off the charts geochem and stream sediment sampling. The source of that, anomaly hasn't been located. We think it's in a third area of the property. So these are just in the low sulfidation. These are one end member. But you've got everything represented through intermediate sulfidation veins, through polymetallic veins, through breccias and replacements, all the way to the other end member, which are the porphyry deposits. And we have two of those. Okay, and then this property is sitting adjacent to the Perina property, which was a 10 million ounce high sulfidation system now mined out that was telescoped on top of porphyry there. And so what's really interesting is the sort of the mineralogical work that we're doing. And now, just in the last week, we've had some of the age dating coming through. And this helps put a chronology to explain, the observations that we've made from the mineralogical work. And what we see very clearly is that you've got, tens of millions of years here. Basically, between the earliest, porphyry development and epithermal development, which would be at Perina, around 10 million years old, 10 to 12 million years old, through the two porphyry, deposits that we have at Daniela and Cerro Colorado, through the intermediate sulfidation veins to the low sulfidation veins. And even within the low sulfidation veins, you have millions of years of history, which gives rise to, because the belt was experiencing, different plate tectonic regimes, extensional going to compressional, uplift of the rock packages and then burial of the rock packages, over the millions of years that the hydrothermal system was active. This is what's giving rise to, this potential for repeats at depth. So it's a really exciting property. The one caveat that I would put to, the description of that large opportunity set is that this is going to play out over years. This isn't going to be a situation because it's in a community context, because of the permitting that we need to do, because we're starting from scratch in a lot of these areas. It's not going to be a sort of a big bang in terms of, surfacing the opportunity in a period of a year or two. It's going to play out over many years.
Okay. Looking ahead, if people want to invest in primary silver, that usually comes with accepting or making a peace with a certain level of country risk, because you're looking at Mexico or Bolivia or Peru in this instance. Peru has a presidential election next year. What are some of the things you're sort of keeping an eye on? What are some of the things you're seeing about, the candidates, their stance vis-a-vis mining, things of that nature?
Yeah, I think generally, if you look at the silver sector, so silver production is dominated by Mexico. But then the silver sector, like the investable universe, is even more concentrated in Mexico than that would suggest. Okay, and then trends in Mexico, depending on your read of events under AMLO, now continuing under Sheinbaum, those may have gotten less favorable. Still a great jurisdiction, a lot of opportunity there, but certainly, developments haven't been positive. For the sector in Mexico. And what we're starting to see is that, companies are looking beyond Mexico for opportunities. So even the largest silver producer, Fresnillo, Mexico-based producer, they're now, in fact, the largest claim holder in Peru, even larger than the Peruvian companies are in Peru. And I think that's something interesting. There are smaller transactions that we see, like Endeavor Silver, which was purely a Mexican company earlier this year, made an acquisition of a producing asset in Peru. So I think this is something that can be a trend. If you look at, going from Mexico in terms of, the rank of silver production globally, you have China second on the list. I think most, North American companies are going to skip over China. Number 3 on that list would be Peru. And Peru is ripe for opportunity. Now, you touched on the political developments in the country. Under Bolarte, it's been a positive jurisdiction for mining investment. Okay, but she is deeply unpopular. We've got elections coming in April of next year. There are many candidates who will be contesting that election. The two kind of most favored candidates in terms of the recent polls that we've seen would both represent swings to the right, either to the, conventional right business aligned candidate in Fujimori, or a far right, which would be more as a sort of a social conservative candidate there. I think either outcome will be welcome, by the mining sector. And this is really, I think, something where you can talk about a trend in Latin America. If you see developments in Bolivia, certainly in Colombia, I think people are anticipating that there's going to be a swing to the right. And Chile would be another example to point to. Argentina may be the lone exception, depending on your read of the recent results. We'll look forward to the results in October to get a better view on that. But I think all of this is very constructive for the mining sector operating in Latin America and Peru specifically.
Well, that's good to hear. You've got a lot going on, Daniel. So maybe if we can end, what are some of the key catalysts that our viewers can expect to see from Highlander Silver over the next 12 months or so?
Yeah, well, look, for us, it's about that continuing that price discovery. We support that by growing the awareness of the company, and so I think for retail investors especially, they're looking to the drill results to help inform their view of the opportunity set. For the institutional community, I think the build out of the research coverage on the company, we have 2 brokers covering us now. I think as many as 3 additional brokers could launch coverage by the end of the year. So I think that'll be very helpful. The continued build in liquidity, very important, because we're just at the very beginning and, kind of over the last month where we've started to become investable to the institutional community. That's the big market opportunity for us in terms of building that out. And I think as that liquidity builds, as the awareness builds, the price discovery will play out. That'll lead to higher valuations. Potential index additions in November and then April of next year, they'll help support that trajectory. So it's basically it's those factors. It's the drilling results. It's these external, kind of market developments that we talked about. You've just had the close of a $3 billion mag silver transaction. Plus $1 billion Adriatic silver transaction. I think those investors want to continue their exposure in the silver sector. That's not something that plays out quickly. They need to do their work. They need to have meetings with management. They need to read through research. They need to build their models. This will be something that plays out between here and the end of the year. I think that's helpful for us as well.
Well, it seems to be a great time for you to be exploring and working up your projects, and certainly a great market for that to be happening in. Highlander Silver, once again, trades on the TSX under the ticker HSLV. Daniel Earle, President and CEO, thank you very much for joining us today.
Thanks for having me. My pleasure.
And stay tuned to Kitco Mining for more investment trends. I'm Paul Harris, and this is Kitco Mining.